And there it is. The markets are officially closed on this Wednesday, April 8th. Welcome, investors and traders. We have some breaking news for you right now. In fact, it's so new, the market hasn't even reacted to it. And before we get into the charts, I just want to bring on Nod from our Nod Live feed. It's already been posted through the Nod Live feed. So for those who are following that news release, you'll know how, I would say, relevant it is to the market and how we're most likely going to see a whipsaw tomorrow right back down to the downside. And we warned most of our members to not get so excited about any new buy activity on a day like today, because the news came out overnight that we're now in a 2-week ceasefire, but I don't know about that. The odds are looking more and more in favor of a breach of that agreement. And with more information, let me bring on Nod. Nod, what are you having to share right now with our viewers? What do you got?
There's so much going on, AJ. Thank you all. Thanks, everybody, for joining us live. We appreciate you, and those on the replay. Your time is very valuable, and we're great to have it with you. Thanks also for affording me the time off last week to be with my folks and with 3Use in Savannah, Georgia, to do some good work. But it's time to get after it. Listen, stocks did close higher as President Trump suspended attacks on Iran for 2 weeks, pausing the 5-week conflict that closed the crucial waterway. But we just kind of got news in the last 9 or 10 minutes that the Straits of Hormuz does have some new blockage and some tankers were turned away. The market has yet to react yet. I'm looking at my screen, but we'll see. But just know, keep your head on a swivel. You know, crude oil futures did settle down $18 or more than 16% below $95 a barrel. But again, this whipsaw action is what we're seeing, and we're going to get to the importance of not over trading and being overconfident. But before I do that, really quick, I'd be remiss if I didn't share the screen with you really quickly. We do have an upcoming cruise in October. We only have a few cabins left, but this is your chance to really meet with AJ in person, Andrew Faldy, the Cryptex team, Power Pivots, Greg Montwell, Anthony, myself, and many of the other StickyTrades members. Listen, we're going to have some great breakout sessions. We're going to have some strategy sessions. We're going to have some fun. But again, grab your cabin while you can. It's stickytrades.com/cruise, and we'd love to meet you. So that's what I have. That's not the hard sell. These are selling out fast, and I'm really pumped about it, so we will see you soon. But let's get after it really quickly. AJ, yesterday's trading was a reminder that extreme volatility can happen at any time. I'm going to pull up another chart here. Pardon me looking away. There's just a lot going on here. A year ago, the VIX ended the week at 45.3, one of its highest close in history. The S&P since then rallied 31%, adding to the list of times when it paid to be greedy when others were fearful. But AJ, I want I know you use the VIX as a reference here, not a trading vehicle, but if I can ask you a two-parter here. So given the recent move, what's your near-term target for the VIX, either up or down? And in times of extreme volatility, please talk to people about resisting the temptation of over trading, trying to buy a top or sell a top or buy a bottom. And what's up with this mosaic defense going on with what's going on right now?
Wow, there's a lot to unpack there, but let's get to the VIX. Now, I'm going to show you a chart right here of the VIX, and as I draw some circles, you'll see that is known as a spinning top. And not only is it a spinning top, which is usually a sign of indecision, but the VIX has gapped down. Now, if you've been following us for any length of time, you'll know that I do give a guarantee on the VIX, and that has to do with the gaps. And that 100% of gaps fill on the VIX, meaning that the price is guaranteed to go up to the level that it left from the close yesterday and the low from yesterday. And so a bullish VIX is bearish for the market. And with the closure of the Strait of Hormuz right now, I don't think that ceasefire is going to last any longer than maybe even minutes or hours.
Right.
And my guess is tomorrow we're going to get that negative news being absorbed by the general market and investors, particularly the institutions. And you're most likely going to see prices start to drop in the general markets. Now, you mentioned the mosaic, and here's one of the things that the U.S. president and Marco Rubio in particular are going to be up against. When the leaders or the leadership of Iran has been wiped out like it has. They basically took out the heads of state. What happens is they now announce a mosaic defense. Some of you may have heard this term. But in short, basically what it does is it throws the power into the 30 provinces of Iran, and then also Tehran. And so now you have 31 separate, more or less, areas or provinces that have their own separate leaders that report to basically no one. So they're their own generals, you can look at it that way, and they don't report to anyone. So depending on who Marco Rubio is talking to broker this so-called peace agreement, now the leadership has been splintered into 31 separate leaders. So if they don't bring all of those leaders together and agree on a ceasefire, then you're going to have 1, 2, maybe up to 10 provinces continuing to fire on Israel. And Israel isn't going to put up with that. So they're going to continue to retaliate and fire back. And it goes on. Now, according to the Wall Street Journal, you can see here at the bottom of the screen what I'm talking about. They break it up into 31 separate command centers. And so this is, you're going to hear more and more about this as they try to explain, I would imagine, reasons why the ceasefire is not holding. But in the meantime, this is more or less a roller coaster ride for the traders, and maybe a stressful time for investors, who many of which may have taken brand new long positions today on the news of the ceasefire. So we're telling people, listen, and we can't tell people how to trade, what to do with your money, but we're basically saying, one of the best strategies in a condition like this is to basically sit on your hands and wait it out until the technical signals give you an extreme move either way, up or down. And in the meantime, the technical charts, Nod, you know this for a fact, as well as many of our members, the technical charts are spot on. Let me just show you something. I wasn't about to share this, but I have to now. Here's a basic spreadsheet. It's an Excel spreadsheet. Now, the number down here is 58%. And what that means is last Wednesday, like we do every Wednesday, I analyzed 50 separate stocks in that given hour. And in 5 trading days, 58% of them have already hit their targets. Now, when I scroll back and go 10 days, I'm going to show you something. These are all the targets that have hit in green. In 10 trading days, 70% of our targets have hit. 70%. Folks who are watching this will not find this anywhere else. And it might sound like I'm bragging or boasting, but this is basically a testament to the fact of how accurate charts are. If I go one more week back, and that's 15 trading days, you're very close to that 70% again, which is what I shoot for. But if I go 20 trading days back, 82% of the targets have hit from 20 days ago when I analyzed those 50 stocks. So if you're more or less turning on the media to make decisions on how to trade, then you're most likely going to get caught up in all the emotional roller coaster that we're talking about. But if you turn off the CNBCs of the world, not to attack CNBC in any way, but if you turn off the television and turn on your charts, you're going to get a much better read on the market without all the emotional content or baggage that is influencing your decision to buy or sell. So it's a great trading market, but at the same time, investors have to be on defense as they are trying to maneuver through this wartime condition in an effort not necessarily to make a profit from what's going on, but to at least defend their position and prevent themselves from losing money as the volatility continues. So that's our approach to this market. And thank goodness that we have Nod in the Nod Live feed, because that news feed most likely has beaten the majority of the news releases to this news of the Strait of Hormuz closing. And it was, and Nod, correct me if I'm wrong, but you got that information as well from Vice President Vance. Is that correct? Isn't he?
Yeah, he was quoting. I mean, there's no shortage of news feeds out there. You have to filter through what's good and what's not. But I take the time to use it and filter through it. And now it's funny. Now other people are quoting it. So again, we don't want to be fast. We just want to be right. And I think the market is full of nonsense. But by the time you see it on some of these mainstream things, you're already late. So
right now, I can't give the exact specifics of the trades or some of the trades that went out today, but I can give you more or less the gist. I'm looking at USO right now, which is United States Oil. And these diagonal lines that I have on the chart, these red diagonal lines, those are my targets from previous weeks. So it did a great job hitting the upside target. Today, the downside target that was set last Friday, today that target has hit. Now, look at what happened with US oil. It gapped down today in a pretty big way. But because of this gap, and the close of the price action above the 20-period moving average, it's most likely going to result in higher prices as the 20-period moving average, which is that blue line, acts as a support level. And with the news that's breaking right now and as it filters throughout the market, you're probably going to see U.S. oil go right back up. Now, we took a long position in an oil service company. We'll leave it at that because our members pay for the service. And I'm feeling really good about that position, by the way. It's one of the few long positions that I even talked about this morning with our VIPs because I'm trying to get people to calm down. I usually don't turn my computer on to do anything in the market until around 11 o'clock. But obviously, with the big gap up in the general markets, I had to make some trade adjustments and put out some trade publications for our members. So I was putting those out about a half hour after the market opened. And then I started communicating with our VIPs to just be cautious with any new positions. And it turned out that the technical signals gave us the accurate information that we needed to adjust the positions. But Nod, you have other information coming out through your Nod live feed.
Yeah, I mean, there's the big one I'm seeing right now go by says over 1.5 trillion in market value was added today. Well, easy come, easy go. So I want to follow up on the theme of resisting over trading. So AJ, I have a chart here. Record turnover usually means low conviction. It just means people don't know what to do, which way they want to go. But if you see the S&P, the churn for each day has driven to $60 billion several times this year. So AJ, with Berkshire Hathaway having an all-time record high in cash and treasuries, and with people so eager to micro trade, can you offer some of your kind of stable and steady targets on the S&P, the Qs, and maybe some kind of spread trade that looks good to you on the Qs?
Well, I'm gonna do the SPX, and we'll stick with that so we can save some time because we're almost halfway through the program here. The S&P, again, this doesn't track volume because it's just the index itself. But look at this massive gap. Now, you don't normally see that in this particular index. But what I find most interesting for those who are following the indicators that I use down below, let me just expand this just a little bit down here. You see the chart at the very bottom. That's the commodity channel index. Now, understand that anything above that red line, which is 100% on the scale from 0 to 100 on the upside and 0 to minus 100 on the downside, anything over 100% is considered overbought by that indicator. It's one of the most reliable indicators that I've used over the past 40 years. Right now, it's coming in with a reading of 211. So it's more than twice what you would consider to be overbought. Okay. Now, going back to Berkshire Hathaway, I look at them as more or less the team of analysts whom you want to follow, right? We follow the technical charts, but there's a lot of people that are crunching the fundamental numbers. Well, you don't have to do that if you're following what Berkshire Hathaway is doing with their cash position. They have almost a third of $1 trillion sitting in cash. And do you think they're fretting over the fact that the market is up today and they're not in it? No, because their analysts are believing that inflation is continuing higher. It's going to have an effect on the economy. It's going to have an effect on payrolls. It's going to have an effect on unemployment. And ultimately, if oil continues to stay over $100 a barrel and gets closer and closer to $150 a barrel, which we've seen lately, now you're moving more towards a global recession that could hurt the Europeans and China more than anyone, especially with the straits being closed again. And so I think the end game here is that Trump and his administration are realigning the global order. It's not the new world order that many people believe. What's happening is we're shifting into a North American powerhouse that is going to dominate, not just with oil and energy, but from a AI perspective as well. And right across the board, you're going to have the entire world trying to get to us to buy the cheapest oil, because they're certainly not going to find it in the Middle East, at least not now. So
Well,
it's a very interesting time. Go ahead.
yeah, let's talk about oil. It's good because oil and gas prices had their biggest monthly increases in the last month. So I'm going to pull up this chart here. So AJ, given the sharp double-digit reversal that we saw overnight, erasing most of March's gains, let us know what you see as your next upside and downside for spot crude, and then maybe how about something in the ETF like XLE, please?
All right. Well, here's what I'm going to do. I'm looking at the monthly chart on, this is the light sweet crude contract for May. And with the big turn higher here in this green candle, we now have this red month showing up. All right. So we still have a lot of month left here in April, where I think we're going to see another move higher. So I'm going to do like a two-part drawing. I think we're going to go higher in the crude contract, and then eventually I think we're going to start coming down. Now, ultimately, I think crude is going to wind up somewhere down here at around between 65 and 70, but it's not going to happen right away. You could see, again, as a monthly chart, it goes up very quickly, but takes a while. Now, that line that I just drew right there, you're talking, what is it? That's 3 years or more. Yeah, it's about 3 years to get to the bottom here. So what I'm getting at is that while the crude is still going higher and still filled with all kinds of emotion, by the time it gets to the $65 to $70 a barrel range, the recession is already going to be taking its toll on not just the U.S. economy, but the global economy. So overall, I think we're still heading lower, but not yet in crash mode. Believe me, I'll let everyone know when I think the markets are crashing to the point where, we're capitulating and you got the algorithms kicking in. There's still too much news floating around on both sides, bullish and bearish, to get people really committed to getting out to the level at which Berkshire Hathaway is out now in cash. But remember, their cash position is opportunity waiting to happen.
Oh, yeah, they're big game hunting. Cash. They're big game hunting for sure.
Absolutely. So, they've got the teams of people of CFAs, CMTs, you got the accountants, you got the lawyers, you got them all loaded up, and they're managing money, of course, but they're not just winging it and trading because of what they saw on, CNBC or one of these financial networks. They're also very well leveraged in options, not just with directional trades, but they also know how to use options to protect their overall position. And you can thank Warren Buffett for that. He's been one of the biggest option traders in the world, and he's not known for that, of course, but that's a fact, just in hedging the positions. So, that's what I have for crude.
I've got one more. It's not the prettiest, but our job is to help people either protect their portfolios or help them make money. So if I can pull up this fourth chart here. So JP Morgan says that the 60-40 portfolio's 3.7% decline in March was the second worst month for their total return since 2022. But that's back, AJ, when inflation was at 8%. So AJ, nobody wants to own bonds until it's too late and their portfolio's gotten beat up. So AJ, for those looking to capitalize on the impending volatility in bonds and caused by geopolitics and the Fed, let me know what your targets are in TLT and BND, please. Again, I know this isn't sexy, but our job is to help people either protect or generate alpha.
All right, now I think the bond market, we're going to see an increase in the bond market here,
sure.
which is most likely going to be represented in TLT going higher. So I already have an upside target on TLT right there at 88.29. And so you have to think about this. If the bond market is going up, interest rates are most likely going to go down. And that may not be just because of the Fed. It might be because the interest rates are staying lower because we're in a recession or coming into a recession. They're trying to hedge that ahead of time, right? Try and nip it in the bud. So my upside target on TLT again is 88. What is it? 88.29, like I said. But I want to throw this off to the dollar first, okay? Because if I go dollar sign, then we'll look at the bonds. If I look at dollar sign DXY, right? look at the dollar dropping and gapping down. And we talked about this one as well with our members today, because you don't normally see the US dollar gapping the way it did today. In fact, rarely does it gap at all. Now, the ETFs that track the dollar will often gap, but not the dollar itself. So a falling dollar is got this gap, and a dropping or a falling dollar is going to be bullish for the metals. And I'm going to segue this into what I did with PSLV today. I think the dollar will rally short term up to the moving average, but that would be short term bearish for the metals and mining companies. So what I did today, and I posted this on X. I don't know how many of you follow my hashtag AJ SLV trades, but I sold out of 15% of my PSLV position, which is a pretty large position, with the intent of buying it all back down at the gap fill level down here. So not only will I be buying back the number of shares that I sold, but I'll be buying back more than what I sold. And that's how I parlay the position, because for me, the name of the game is how many shares can you accumulate over time, getting in and out with small percentages and scaling out or scaling back into the position. So go to my X page and you'll see the chart with my notes attached to it, and you'll get a better feel for that. Now, BND, if you look at this, remember, the dollar is going down, interest rates are also going down, and the bonds are going up. So for the short term, you're going to see the opposite. I think you'll see the bond market pull back. Then I think you'll see the gaps down here fill, and then an upside right back as it bounces off of that 20-period moving average. So I think we're seeing is the beginning stages of this breakout in the bonds over resistance. Now, I'm not trading the bonds, but I am using interest rates, the dollar, and the bond market to help me gauge the position in and out of the silver and even the mining companies. So again, it's very exciting if you're following the charts. It's not going to be so exciting if you're just following the talking heads, because they're going to throw whatever they can at you to keep your attention focused on their channel or stations. And we know better than that for sure.
Well, yeah, we don't have an agenda. You and I are sitting on a portfolio, so we can just tell people what it is without having any sort of blind conscience or issues. So it's great.
Yeah.
Hey, listen, at 6 p.m. Eastern tonight, you are going to field and forecast over 50 tickers from our members. You're going to give them your targets live. But let's give everybody a taste right now, if you don't mind. Tafe is asking if you could look at SPIR, please. He says, there's a monster move today. I've never seen a green candle like this before.
SPIR?
Yes, please.
Okay. Now, this one obviously is a bullish candle breakout over a resistance high. What I would say here is you're going to get a little bit more continued move. I'm just going to, now, some people are going to think I'm crazy for doing a two-part forecast, but this is exactly what we do. A little bit higher, just a little bit higher, 2110. Now, I'm going to go further out in time. Then I think you're going to see the thing just immediately pull back down to 17. I'll adjust that. Now, I'm not trading this one, but that's what the charts are telling me, because when you get extreme moves to the upside, they're usually short-lived on breakouts. And this would be the breakout point right here. This would be a more or less a resistance area. You could even call this an elongated cup and handle. You see here? So there's your cup. Here's your handle. Here's the depth of the cup. Not going to go too far into that. But in order to measure the move and set a target on a cup and handle breakout, you take the depth of the cup, which is from the bottom of the cup to the brim, and you attach that to your breakout point. And that's why I went a little bit higher, because we're almost at that target. Then once it hits the target, you got the technical selling coming in as traders take their profits. So if you have that one, I'd be very protective. You don't want to turn that winner into a loser.
That was crystal clear.
All right.
You talked about PSLV, but on a day where Market Uniqueness says, guys, silver was up, but AG was down. What's going on in this bizarro world?
Well, one is paper silver, one's a miner. That's
right. But can you explain that? Because I think a lot of people think silver is silver.
No, it's not. They don't always move in lockstep. Remember, silver, the paper silver doesn't come out with earnings every quarter.
Sure.
Right? They don't have to deal with the high price of oil. Now, that's the key for for the mining companies like First Majestic. If oil is going through the roof, what's their biggest expense? Oil, diesel, to run the equipment, right? So if oil is still going up, a lot of the miners will take a hit on that news. And then as silver starts to go back up and their profit margins widen, you get back into the miners and you play it all over again. But it's going to be very hard for you to try to balance the two or juggle the two, holding one paper silver position and then holding a mining position, the others. The minings and metals, you have to go and use the charts. I mean, look at the target that I had here. Look how close it came to hitting my upside target here. And then that's not uncommon, by the way. When you have a lot of my targets hitting, we generally get prices start to reverse. But I'm still long-term bullish on First Majestic, Pan American Silver, a lot of the other critical metals and mining companies like CRML and USAR. USAR, if I could segue into that one, that did really well, and then it sold off towards the end of the day. But look at this gap up. You see this now? USAR, this is a mining company outside of First Majestic, and this one went up while First Majestic has a big red candle, right? They don't move in lockstep, like I said.
Right.
But if you're following the charts, you could roll in and out of positions pretty easily. So in other words, if you have a stock that's making a move to the upside and showing strength, you want to sell out of the weak ones, roll into strength. So you're selling weakness, buying strength. And these are stocks that are cheap enough for anyone to trade. I mean, this one closed today at 16.78, and I have an upside target at that gap fill up there at $18.11. I think there's a good chance that will hit as well. Yeah,
that's great. Our friend Mark, maybe if you look at PL, Papa Lima, please.
PL, Mark, do you have a position in this? I can't tell you what to do, but I can tell you what I would do. I'd sell it. Sell that thing. Now, why is that? Because here you go, folks. Take out your 7-point trading checklist that we've developed. That's a spinning top. Can you see it? It's a little, I'm sorry, I get so excited about this because no one's teaching this. It's a little small body candle with a long shadow above and below, mainly equidistant. When was the last time we saw a spinning top like that? Well, there's one right there. Here's one right there. Oh, and guess what? There's one right there, and there's one right there. So when you look back in time, each time we saw a spinning top, well, that's not a guarantee. This is a shooting star very closely related to a spinning top. But each time you saw that bearish candle, what happened? It resulted in lower prices. So in a split second, I would say sell that and then look down below and you see the oscillator starting to turn lower and the volume is now starting to increase on some of the selling pressure. So it's pointing much more to the downside than to the upside. You say this is Mark that gave us this one, or
yes,
Mike?
please, yes.
Okay, so I'm gonna put out a target on this one, and that is going to be to the downside. So I'll go out on a limb and say, okay, I think it could pull back to around 34. I'm gonna go a little bit lower than that, 34. So you get about $2.50 to the downside, which is a good strong percentage there. About 7% or so, maybe more. And that one will most likely start seeing some support there. Now, for those who gave us stocks a while back, we're still tracking those so you get your swag. Once those targets hit, we will be mailing you the tumblers, the Sticky Trade tumblers. So we'll do the same thing here as well. If this target hits, and I think it will, if it goes down to 34, we'll be sending some swag out as a thank you for contributing, kind of a prize there. Okay. Good luck with that one. I think you'll be okay. All right. What do you got next?
Well, I was going to wrap it up in our next 90 seconds. I mean, we're in good shape here. I think it's important that we continue to stress not to overtrade, take a breath, look at the technicals, consult in those that you trust, go, take the time to do some research. And I think one of the biggest things, AJ, again, we can convey is, don't become your worst enemy. Don't deviate. Don't let markets re-energize you.
Listen, we're all emotional beings. We're humans, right? But the critical thing you have to remember as we come into the close here is that you don't let your emotions take over that part of your brain that makes the decisions whether or not to take a profit, limit a loss, or get into a new position. You really have to learn how to put those emotions aside. And the best way to do that is to keep your eyes on the charts. Folks, thank you so much for joining us. We had a good time in this very short half hour.
Yeah.
Hope you join us next time, next Wednesday. For those that are joining us on X, come on over to YouTube, hit that subscribe button, and you'll be able to put in your ticker symbols and ask questions right from the YouTube platform. So with that, have a good night. We'll talk to you next time. So long.
See you on the cruise.